All right, we are live for a Friday edition of the Mike and Mario Show. Excited to be back and looking forward to connecting and just going through this week as well as sharing our thoughts on the days ahead. But before we do that, Mario, how you doing, my friend?
I'm doing well, Mike, and you?
Oh man, I'm excited, man. It's Friday. I'm excited. It's a holiday weekend here in the U.S., so multiple reasons to be excited. But more importantly, get a chance to kick it with my buddies. So definitely looking forward to talking about what's happening and where we're going, man. But yeah, so on my side here, I titled this "The Fed Trap" just because there's a couple articles we're gonna get to that shows how much more of a tight pigeonhole the Federal Reserve and other central banks have put themselves in with the initial attempt of trying to dial back their own policies, which has set them in a trap, and how it probably has already exploded on them. So we're going to get in that, but yeah. So let's start off with the first article if you want, and also for those that are tuned in, throw out ideas, thoughts, suggestions in the chat, and we'll definitely get to them. And as we get throughout the live stream, so hope everyone's doing well this morning. All right, so let me just pull this article up here. So I want to start off with this one here, just because I think it sets a great framework for where we're at now and how the Federal Reserve is still dealing with the problem they created, for the great financial crisis. At the same time, we're heading into something that I'm seeing more pundits talk about. I heard the word Great Depression or Greater Depression thrown out there by one guy. So anyway, but look, long, sweet, short. The Fed Trap. So Stephen Roach, and you definitely chime in, Mario, when you're ready. This is 2014, and he was commenting on how at that time he was concerned with the Federal Reserve and the policies that they put in place and their inability to maintain their two mandates, along with all their quantitative easing policies. And he was concerned that they were trapped at that point. And this was 8 years ago now. And so here we are now, full speed ahead, and the Federal Reserve is attempting to do the same thing they couldn't do then to further bury themselves in this trap. And so it's a never-ending loophole, but it's intentional, in my opinion. But go ahead, share your thoughts on that.
Yeah, I mean, I'm not surprised about the trap, and I was warning people before Mr. Roach in 2014 when I was even warning people before the '08 crisis because of the speech that Ben Bernanke gave in November of 2002 about the fact that the Fed, in his words, had to do anything it took to stop deflation, and that and he actually mentioned helicopter money. Right. So that was the famous speech that gave me the signal that because we're just coming out of the dot-com bubble crisis, Greenspan cut rates down to 1 at the time, which was really low. So I thought, well, next time we have a big crisis, they're going to go crazy, these people. And having learned from history, read about the French experience with paper money during the revolution, the assignats, or the South Sea bubble in the UK, and also the Mississippi bubble. It was all about printing money. And the problem with that is once you embark on that money printing, and in France, when they started in the 1790s, they said, oh, it's only going to be once, and then it will kickstart the economy and we'll be okay. Right. But what they found is that after a year or two or whatever time, the effect of that sugar rush went off, and people were clamoring for more, and they couldn't stop. And eventually, they burnt the printing press in Paris. In the Place de Vendôme, which is a famous place in Paris. They burnt it because it was such a big failure. And so even in '02, I thought, well, if they follow on this Bernanke policy, we'll have trouble. And they did in '08. And that's why people like Peter Schiff say it's QE to infinity. They'll never be able to stop. Right. And I think Mr. Roach is right. And he wrote in 2014, and he's warning again now.
Right. So we'll get on that one. So as you're speaking, I was trying to just look up that Bernanke speech you're referring to, but then I did find something else that Mr. Bernanke's out again. I guess he has a new book that he's out here promoting. So he's now pretty much going against the same thing he put in place years ago, and he's now talking about.
I'm not into burning books, but if you get really cold this winter and you can't pay for your fuel, and you've got the Bernanke book, I would use it to keep the fire going.
So just this headline itself lets us know how, these people are living in a different realm, or they're, literally they're having issues maintaining their own scripts in unison. But the Fed made a mistake and started fighting inflation too late, former chair Bernanke says. So I actually listened to some of his little spiel, and he was more so speaking out against his current colleagues. Whereas a decade ago, it was unheard of to speak against, any of your colleagues. Nevertheless, to come out criticizing them, because that's just not what they do.
Well,
but what's changed?
The thing is, there was an interview about a week ago, and I spoke about that. I think a video this week. Mervyn King, who was the governor of the Bank of England from 2003 to 2013. So he was there in 2008. Did an interview with Sky News, and he actually, at least he admitted that the problem is the economics profession. The ideas that and he said, unfortunately, all the central banks, they hire all these people, and he said, I'm not blaming anyone, but I would say Bernanke is the big culprit of what's happening, because Greenspan to some extent, because Greenspan started the Greenspan put of bailing the markets out every time there's a problem. But Bernanke set the intellectual model and for QE, for lower rates, for this rubbish about deflation. I mean, I don't see any deflation out there. I just see the money supply going through the roof and in the currency collapsing. So at least Mervyn King was very diplomatic. He said, I can't blame any individual, because they had to go along with the economic wisdom, and the economic wisdom comes from people like Ben Bernanke.
Right. Now, at this current moment, given the fact all central banks have followed the Keynesian model of, utilizing central banking policy to support and provide a crutch for government, do you think Keynes is rolling over in his grave right now, seeing his failed experiment come to an end, or what?
I think Keynes, probably his ideas have been really corrupted, probably, even though I don't really like you. He did say in the introduction to his major book, I forgot what it's called, The Theory, I forgot, but in 1936, he published it in Germany, a German edition, and he put in the foreword, my theory of economics is better suited for authoritarian governments. But I don't think he would have imagined that they would have used his policies to the extent that they have. I think the idea he had was that if you had a recession, a business cycle went down, you just pumped in a little bit, from government spending to keep things going. But the problem with that is it's like a drug, you take you go out, like last week, for example, I went to a party at the golf club on Saturday night, and I had a competition the next day. And I went with my wife and friends, and I said, I'm not going to drink, because if I have a drink, I won't stop, and then I won't be able to play properly. So I didn't have a drink. But the thing is, you have one, and that's the problem with the Keynesian policy.
You got to have a filter. You got to know your limits. And unfortunately, when the system itself is designed to further, and this is why the whole debt-based fractional reserve, usury model that, I ran it on earlier this week is in place, there is no limits to it. And that just goes to show how much of a sinister agenda the financial realm or the monetary system has become, to where now, with removal of gold and silver from the people, giving them substitutes and bills of credit and all types of digital illusions. Here we are now at the point
maybe
where
we could talk about how gold is an antique and it's useless now.
That is a good
now
point.
That you said that.
Yeah. So I said, let's so let's jump on that one. And let me put this guy up here. So I'll I sent this to you just because it was.
And this is on Kitco,
to hear him talk about this, but this is from Kitco, and I mentioned they went off the cuff. They completely gone globalist agenda, pro banker, everything between, and this is supposed to be a precious metals company. So how would you interview somebody who says gold is an antique? Would be my question. But as I mentioned, the host of the show wasn't even happy. He's just doing his job, so I understand. But former central banker of Canada just talking about how gold is not a part of their model and how, it's basically, it's in the form, it's just a rock. It sits there. It's no good. It doesn't do anything. And I'm like, oh, it protects the people from you. But what were your thoughts on this?
Yeah, I mean, I listened to that, and the clip where he says gold is we hold euro or US dollar paper because they provide a return.
Mm-hmm.
And then I thought about this new issue of Incrementum from the guys from Liechtenstein who cover gold.
Yeah.
And every year they do a report card for gold.
Yeah.
It's called In Gold We Trust. It's a really great report, and they've provided the return in all the major fiat currencies, Canadian dollar included, since the year 2000. And you see, it's giving you a return of 8.4%, not in the last 20 years, but every year for the last 21 years, you're getting 8.4%. So this guy saying that you get no return on gold, it's just really
right. But that's
either he's ignorant or he's just really a central banker at heart and hates
right.
gold, because gold is the anti-central banking currency, really.
Right. It's the kryptonite towards the banking cabal. But at this point, when you've made your entire career predicated on following the script, I guess there's sometimes you say this lie so many times you start to believe it to where it becomes who you are, to where even if you were to try to confront him with truth of like, hey, just showing him those numbers, I bet you his rebuttal will be so strong to where it'll even convince somebody else to look at it like, oh no, go maybe it might be, what I'm saying. So that's how delusional people are.
Yeah.
But it is what it is. But let's we got a lot more stories. Let's jump back to the Fed trap, because I want to further highlight that and get to the primary article from Stephen Roach that showed where we're at. And then, of course, we touch on the bond situation. But as Stephen Roach came out 8 years ago talking about how the Fed was, going to have problems, this is his most recent piece, basically, saying the delusional nature of Jerome Powell being able to so-called fight inflation, but he know what he needs to do, but he won't be able to do it because it's not in him, type of thing. But share your thoughts on this, Mario, because you sent me this one.
Yeah, I mean, I'm not surprised because I think the market still gives Powell a lot of credit. Powell has actually mentioned Volcker, that he admires him. But as Stephen Roach says, Paul Volcker is a no-nonsense central banker, and he believed that the only way to stop inflation was raising rates and like killing it, raising rates above the inflation rate.
Right.
And Stephen Roach notes that the average real Fed funds rate under Powell since he started is the most negative of all the central bankers in the last 50 years. And he compares it to Volcker's 4.4. So we're still at minus 2.25. So there's no, even, and he gives Powell credit, saying that he believes, in public service. He takes it very seriously, and I'm not saying he doesn't. But like, and then he references Lloyd Benson, who said that something about Dan Quayle being, but he said basically he's saying that Paul, Jay Powell is no Paul Volcker, really.
Yeah.
And I think the market, a lot of people are going to get hurt because right now, people look to this break even inflation expectations, and they say just because the market, the bond markets and Wall Street think they think for some reason that inflation is going to go back down to 2 or 3 without them doing anything, and I think that's really dangerous. And I saw that in their minutes from the previous FOMC in May, they've come out and they're talking down the core PCE. They're saying, well, by 2024, it's going to be at 2%. But, that interview of Mervyn King last week, he called this the King Canute theory of inflation, which basically is, the central bankers, they think just because they're saying that inflation is going to be lower, it will be, and that they don't need to do anything. And the late Paul Volcker probably would have laughed at that. He would have said, "Well, you need to raise rates. You can't just talk about it."
Right.
Paul Volcker raised rates to almost 20%.
Right. Now, one of the things that concerns me is the fact that we're at a point, and because of this whole Davos situation coming to an end this week, I had a chance to listen to a lot of different global leaders and business leaders talk about their agenda. And the overall consensus was that we're at a turning point. And that turning point, the response needs to be more business cooperation, more government cooperation
Oh
on top
yeah.
of all the things that they're going to have thrown out. And I was saying the other day in a rant that, those people are going to come back supercharged in their efforts to further enslave humanity with
Oh yeah.
utilizing technology and everything in between. And so they obviously know the gig is up. The
Yeah.
current structure of the monetary order that they put in place is no longer sustainable. And so just the fact that all central banks are coordinating their tightening policy, and I've just looked, I've retweeted, like, I think, certain other smaller banks have hiked rates a lot higher and faster. And I think one country is already 5 hikes into it this year or something like that I saw. And so it's like, they're all coordinating this event for something to happen at the same time.
Yeah, and it feels like almost like they want it to happen because it will give the Davos people an excuse to come up with a solution. By the way, were you invited to Davos?
No, I mean, I couldn't make it this year.
Yeah, I turned it down.
I couldn't make it this year. But then again, I even saw a lot of journalists over there, alternative media journalists over there, and they had, their own police force on the streets. I
Yeah,
heard
they
people
even
got
have a
detained.
private mercenary police force. I saw with they call it the WEF police. I
Right,
mean, and they're
so
holding machine guns at people.
right.
I saw there was an influencer. I think he's Arabic, something Nashar, or he's got a lot of followers on YouTube. He went and he's gotten a lot of stick for going there.
Yeah. So here's another guy here. Let me see. I just so I, once again, we're say won't throw in Davos like let me just little headlines I type in real quick.
That was the guy that was detained by the private police. I don't even think it was Swiss police.
Right.
It was
So
a private
whoever this guy is right here, in this little fatigue or whatever he's wearing, he was, one of the people that was responsible for making sure that he didn't, speak truth. But once again, most of the public stuff that was given to us, every day they had a summary of the 4 main takeaways from the leaders' discussion. And so I listened to all of them, and they were all fear porn induced. It's all about, climate and the weather and the money, and this is what we're going to do. I'm like, dog, like, so clearly their conversations went a lot more in depth than just that. So we're going to really find out.
There was a guy, I think he looked English, or he wasn't Chinese, but he works for Alibaba or someone, and he was talking about that everyone's going to be tracked, right? And also there's something out of the World Economic Forum talking about how they're going to work with Indonesia to have social credit scores as well.
So we jump around everywhere, but so and that's
individual carbon footprint tracker.
Right. And so, like, I was listening to the Alibaba guy speak, and he was excited, and they're rolling out this June, like next month, the test trial utilizing their app. And so as a result of this, they're going to use your data, and the algorithms will track your certain activity to basically predict ahead of time things you might or might not do. And they're going to put it all together and give you a score. And that score will probably give you discounts and all types of things as of now, because it's going to be sold as something that, you would definitely want. You would want to save 5% on your checkout, wouldn't you? Your score, it says da. But then again, that's how it starts. And so one thing I wanted to tell the audience is that, every one of your social platforms that's publicly traded, that's a part of this, that's partnered with the World Economic Forum, they're going to be rolling out experiments this year to test you. And the best thing you can do is to not participate in those platforms by continuing to give them your data for free. Like, whenever you post a personal picture, you and your family on Facebook or whatever, you're investing in your own in the takeover that they're having over you.
Yeah.
So you need to dial back on the mainstream stuff as best as you can. I know it's hard. Find yourself some alternative sources that you can connect with, to connect with all your favorite content creators that gives truth, and get ready to start separating yourself even more. Come social media.
I post my videos on YouTube, sorry, on Facebook, but I have a private Facebook page, but I haven't been on it for ages. I don't really care about it. I just put my videos on the Monaco 64 Facebook because a lot of people like to watch it there. But back to the World Economic Forum, I mean, 10 years ago, people didn't really care much about the Davos summit. It was usually in February during the winter. This time it's in the summer. But just my feeling, it's like my gut feeling is that a lot of the people that are going to this summit, be they in the corporate world, political, academic, whatever, media, they're going to regret it very soon. And I'm not threatening them or anything. I just think a lot of people have woken up to the World Economic Forum and the fact that they're not like a friendly NGO. They actually have a nefarious agenda. Really. Yeah.
And a part of my beliefs is, might as well, since we're talking about that, the whole Hegelian dialectic approach. And so I had a chance to put together some thoughts with the community's help to further, try to narrate and explain where we're at and how we got here, and using a variety of different, tech, software, and everything like that between. It's suckered a lot of people into thinking that they're going to transition and build they're going to prosper within the same system that's designed to trap them. And so the World Economic Forum, I definitely equate to being a part of, as it says at the top, the Rothschild, Hegelian dialectic, and of course the too big to fail banks and all the oligarchy families, the ones we know about and the ones we don't know about. The fact that in 1998 they told us that we, in this time frame, will be in need of a world currency lets us know that everything we've experienced to this point has been their reaction, and all the things that's come from the things that they've set up, which are the problems, indebtedness, welfare state, and you name it. And then all of a sudden, people have fallen for the trap that the solutions that they are funding are going to be utilized for our own freedom moving forward. While they never talk about gold or silver, it's not.
I know. Even JP Morgan now, they came out this week and said that cryptos are the alternative, their favorite alternative asset. A few years ago, Jamie Dimon said that Bitcoin was a fraud. And if you look at the time when crypto's Bitcoin white paper was created around 08, 09, that was just after the collapse of the system. And you had the Occupy the Fed movement, Occupy Wall Street and the Fed. And I think they knew, people are going to question the monetary system. So we have to create this digital gold. Even I started looking into Bitcoin around 2012, 2011 even. And I thought, oh, this is good. This is like a grassroots. We're going to have a decentralized currency that has limited supply. This could be good. I didn't abandon gold, but now the more you look at the people that are involved as well, Novogratz, Raoul Powell, Max Kaiser. These are all ex-Wall Street guys. I know I'm ex-City of London, but there's a lot of Goldman Sachs people involved in this, and now it looks like Wall Street is falling right behind cryptos and Bitcoin. They never mention gold. That it's gold and silver.
They won't say the word silver.
Yeah. And that's why I'm still sticking to stacking, because it's still not in the public conscience.
Right. And they don't want it. But think about this. Also, to that JP Morgan, newfound love and admiration for the digital space is that, isn't it interesting that JP Morgan, to my knowledge, let me know if I'm wrong, they still have the largest stash of silver, through all their, in their vaults and whatever on record that we know of. And that is just laying dormant for whatever reason. So obviously that hoard of silver that they have which to my knowledge is the largest stash known, is for a reason. Like they got insurance for something as well. So
Yeah.
they want to steer people towards the digital, hold on to the physical. When the dust settles,
Yeah.
the stuff that's still
Is it,
there will
do they
be.
have more silver than Billy?
I don't know. You probably did Billy pretty well. Let's acknowledge the super chat real quick. Appreciate you, Chris. It says, when the Fed does pivot and go back to 0% rates and cranks up QE, what will the 10-year bond and mortgage rates do, both in the face of rising inflation? Thanks.
Yeah,
I think this goes right. Go ahead.
I'll answer that. I mean, you can answer
I
as
was
well.
going to go to the article.
Yeah, I think the 10-year recently got up to 3.15, 3.15. So if they do pivot and cut rates to zero, I think the 10-year could go back down to maybe 1.5 or 2% at the most. I don't think it's going to go down to the 0.3 that it went to in 2020, because I think we're in a bear market for bonds. So yeah, it might come down to 1.5. But then, when they pump everything up again, the next time we go up, I think we'll break through the 320 level. And because I think we're in a secular bear market for bonds.
Yeah. I was going to talk about so I once again I have mixed feelings on the backtrack theory. Like, once again, we are in uncharted territory. The world, global business leaders and all that, they've met for the idea of transitioning and rebooting the system. So my belief is that they will not follow conventional methods the way they have to this point, because we're at the end of a system. And to imply that they're going to stop, backtrack, and begin providing accommodative policies, to me signals that they're going to continue to do the same thing. But I think they want something different. So
but they could also bring the system down through hyperinflation.
Correct.
Or, if they keep hiking, they could bring it down through a crash or a deflation.
Right.
So either way, I mean, I think yesterday it was Bostich. He's the Atlanta Fed president. He said that they could pause after September. So they are talking about it, and maybe the reason why they want to hike so quickly into like what seems to be like the beginning of a recession. We had GDP first quarter, the preliminary one, which is the second number, that came out at minus 1.5. So why would they be tightening into a recession? Well, because they want to get up to like maybe 2%, so that eventually they can cut again. You see, because rates were at zero, you can't, with a major reserve currency, you can't cut to negative. That would totally, it would basically make commodities go infinite.
Right.
That would be backwardation in all commodities.
Right.
And so he looks quite healthy there.
He looks like he's hanging on by literally. They got him plugged in and stuff at the end of the night to rejuice him. But back to that point about my thought is, and so this is a far stretch, far left field thought process, but I don't think they're going to go full steam ahead mimicking prior events, just because. I mean, apart from trying to keep the illusion that they can contain this and continue to juice the markets, there's no end to any of this. So I think they're going to restart and do something different, which means that I think they'll be willing to allow all the asset classes that have been artificially stimulated deflate to the point where they go bananas and become like, we go back to zero. We find out what things are really made of. But then again, because that'll create the ultimate destruction that would then allow them to come in with this ultimate solution for them of central bank digital currencies. Your score, you got to log in here to get rejuiced up, government food, government this, and it's going to be a Mad Max situation if it gets to that point, because all the stock market wealth gone.
The only point about that one, my counter argument is if that would be a deflationary collapse, and the debt would still be there, a lot of the debt. But in a hyperinflationary crack up boom, the currency collapses and the debt becomes worthless. So it's probably easier for them maybe to start a new system with the slate wiped clean in terms of debt. But you could be right as well.
No, so that's
either way, I think having real
so so it puts you in a different class to where you actually have money.
The clicky sound of silver.
It's priceless.
Yeah.
So the long story short, whether they hyperinflate it or whether there's an event to where everything, because ultimately, because the banking sector is where the majority of where all the wealth is at, and if accounts on the screen says error or it says zero, that right there is wiping everything clean. That's a reboot as well. So whether they inflate it away or your screen says zero, you have no way of functioning in the real world with real tangible value. So they will bring the solution in the form of a wallet, and like that type of thing. So it's pain. It's pain no matter what. They inflate it or it disappears. It's
And and then you will need also your all your medical things in order to use that wallet, I guess.
right.
They're
And
really
that's
that's a real bad situation.
now. So watch this. And so the reason I have more confidence in that is just because according to the way things are shaping out and the solutions that are in play right now. So I'm gonna zoom in real quick so you can see some of the things I have here. So we're being led to believe that the decentralized coins are going to be ways out of the system, which they could be for up until a point. And then CBDCs is their goal for every nation. And then along with that comes the digital ID, your interaction to be able to participate in the financial sector will come through some digital identification. And then we got the World Health Organization and their desire to take away our sovereignty. Yeah. So you put all that together, that's a digitalized, tyrannical takeover of humanity that comes after, whether it's an inflation, whatever it is, it comes after it as their response. And people will line up excited to do it if they've already lost everything.
Oh yeah,
because it's been taken away from them.
Yeah, if they're desperate. Yeah,
right.
I found a spelling mistake there on that. Can you bring that up?
Okay, please do. Yeah, bring that to me. Right there. Where we at? Where we
at? New World Order, even misspelled world.
Oh, good point. I appreciate that. Okay, that gives me something correct. All right, so we got more subjects. So speaking of which, I just want to definitely bring up. Let me just because you sent me a lot of good stuff I want to touch on. Let me grab it real quick. And also for those that got thoughts, ideas, suggestions, throw it out there. But here's something that you brought to my attention that I think is worth touching on when I find it. Let me put myself back up here. But the Tether situation. So we can't not talk about the crypto and the unknowns. And of course, Tether could be the canary in the coal mine that causes a true bear market when it's exposed. But about Tether buying El Salvador's junk bonds, or basically junk bonds in a sense. And then
62% yield is it's real junk.
So like the fact that in the person mentioned, whoever this comes from, mentioned that they took real funds from people and then put it into a country that is experimenting with something that. So this to me shows it's just a ring of illegal criminal activity in a sense to me, because it's a Ponzi scheme on top of a Ponzi scheme that is not being touched or really argued from the regulatory body here about this activity. They've allowed Tether to be a quasi Federal Reserve type system to slush those dollars or derivatives around. To prop up the system.
They're creating Tether out of thin air, and then people are using Tether, leveraging it to buy cryptos. It is the de facto central bank for the cryptocurrencies, and cryptocurrencies were supposed to be decentralized and not. This is creating a massive bubble, and I have read about Tether, how 2 years ago, there were people warning, and I remember reading about it, that Tether originally was supposed to be for every dollar you put there, they held $1 cash. But now it's they hold all kinds of securities that are not cash. So it's like 30% leverage, if not more. There's only like for every dollar in there, there's less than 3 cents really of dollars. And I think cryptos we saw recently when they dropped a lot a few weeks ago, it affected even the traditional markets because it's gotten so big. So it bears watching the situation in cryptos, because it could spill over, just like the subprime mortgage crisis spilled over into the whole economy. The crypto potential crypto meltdown
contagion.
could spread to the traditional markets.
Yeah. Think about this. And the narrative has already been set. Just, I think it was a week or two ago, Janet Yellen said that, she don't see crypto, having any systemic risk on the financial system as of now. And so so Janet Yellen mentioned that. I think Jerome Powell asked that question during one of the hearings, and a couple other Fed people were talking about the systemic nature of the cryptos. Could it spill in to the conventional markets? I'm like, yes, because they're using the gateway into the crypto market happens to be the stable coins. And they're using a stable coin narrative as an excuse to come up with more regulatory clarity that will somehow, some way relate back to the Fed coin or not lack thereof. And they're going to pick a winner and a loser, but ultimately it's all done in dollars. So that gives the dollar system more of a lifeline to be used worldwide.
The worrying thing is that Yellen said that. It was like Ben Bernanke in I think late 2007. He said the subprime crisis is contained and it's not going to spill over into the economy. Everything's going to be fine.
Yeah.
Look what happened a year later.
And then speaking of which, real quick, because this was, it would have been in an earlier rant, but talking about the dollar and how, the Fed is trapped. And I guess a part of the trap is the fact that we already know that, the status of the dollar as a reserve asset that you want to have is no longer. It's more so something you have to use to, make do and get by temporarily. But based upon statements like this and Jerome Powell's comment months ago saying that there could be two reserve currencies. So now it looks like they're concerned about the status of the US dollar and to not take it for granted. But that lets me know that they know the writings on the wall that at some point there's going to be a preferred alternative. Now, we'll find out what that will be, but you better believe it's going to have something that clings behind it to give it some credibility, in my opinion.
Yeah, I had a quick look through that article, and it's weird because she actually kind of detracts from the real problem with the dollar, that it's been inflated away and it has very little value. And she kind of equates this to the fact that other countries are creating central bank digital currencies, and it's got nothing to do with the weakness of the dollar. It's almost like she's saying, yeah, the dollar is in trouble, but if we create a digital Fed coin, everything will be fine. She doesn't really talk about the fact that they've created so many dollars out of thin air, and the system is so unhinged.
Right.
So I would say this is like basically a distraction, and that's why you need to hold on to hard assets, gold, silver, and commodities, and don't get lured into these digital coins or cryptos. Even Bo Pony, who has told people to stay with crypto, he thinks eventually it will become like the mark of the beast and you have to get out of cryptos. So I agree with him on that.
Right. And I agree. And a part of, just for a quick moment to talk about the reaction part to the problem they created is things of this nature. And they're using the words financial inclusion and stakeholder capitalism as the reaction of something that's needed to help get to that final solution, which will be cryptographic in nature. And I always say on my side, if you didn't write the code, you definitely going to control the consensus. Therefore, will you actually have the coins at the end of the day? What type of coins will it be? So, I got my theories on that, but let's keep it moving, man. So we're at that 38-minute mark. So let's get ready to take some questions or some thoughts or ideas. If you have thoughts, ideas, or topics,
James,
go ahead.
James Mahoney, Mike, what is JP Morgan's preferred asset, gold or silver?
Yeah. So as I mentioned about them having, the largest silver stash that I believe is known, then that lets me know silver is a strategic wealth preservation and tool that they're going to use for whatever. Like, I don't know. I think, so my personal opinion is that there's always been a consolidation of banks, every single crisis, from mom and pop's banks all the way down. And now we're down to 7 or 8 of the globally systemic important banks here in the U.S. I think there's going to be more of a downgrading to 2 or 3 or so. That'll be the last one standing to complete this heist that was set out, on Jekyll Island. Was it back in whatever time frame that
1910.
was, right? To complete the global takeover. And so once this is completely sub-zero, and I think this current administration is the last one of its kind before we head into something else. I think the last two banks standing will be J.P. Morgan and probably Goldman Sachs, give or take. And then from that point on, when the Treasury and the Fed are completely one, and whatever they roll out on top of that, of course, the shareholders will be the last two big to fail banks, Goldman Sachs and J.P. Morgan. And with that large stash of silver, it puts them in a better position to have a stake at the table if China and Russia says, open up your vaults. And then the J.P. Morgan can roll it into the Treasury or Fed, and they say, we have silver. You need this. We can sit at the table with you because we have a large stash as well, type of thing. So that's my suspicion, but
I think they probably have quite a bit of gold too. Low blood pressure. Mario, will my maxed out credit card debts be inflated away during hyperinflation? Yeah, I mean, they'll become worthless, but the problem is, will you be able to service them? Because during hyperinflation, there's almost no currency around because it becomes so worthless and people want to get rid of it. And the currency that you have, you're going to be desperately, hopefully not, but a lot of people will be desperate to get the necessities, and they won't care about paying off their credit cards.
Right.
So it could be all right, but it's always difficult to time those things because before we get to the hyperinflation, you might not be able to service it because of the rising cost of living.
Right. Here's another thought here. It says, why in Venezuela did we see people paying with little specks of gold? Wouldn't silver be more practical? 100%. But I don't think, them. I think it was, according to the videos I saw, them people panning for gold was a lot easier because it was on the surface, where silver is, it's much smaller and you got to go deeper.
Yeah. I think what it was in the region in Venezuela where they have like artisanal mining for gold. And that's why they were using it. It wasn't like in Caracas, in the big cities, that they were doing that. It was in the backwoods, so to speak.
Yeah.
So gold is much easier to pan, alluvial gold than silver, and that's why they use gold.
Yeah, and I've seen some videos, and let me actually share this this little article here just to highlight what that person was talking about. But once again, it spins. So you got some flakes of gold being put into a can. They're measuring it, the weight and measures. They're measuring it for some soap and vitamin C and everything else in between. So that's a hell of an exchange that it will be done here in the U.S. at some point in the future, I believe, as a alternative to those that do not want to participate in the mainstream system, in my opinion. But all right, what else we got? Any more questions out there? What else we got? Anything else?
Let's see.
Says thinks. Let me see. Here's S400 says Mario thinks at some point in the next 10 years will the U.S. government and Federal Reserve nationalize precious metals mines, and how would I get my gold if that happens? Good question. I have my thoughts, Mario. I think that's for you.
Yeah, I mean, if they nationalize it, they probably have to buy out the shareholders. So you probably get something, but it probably won't be that, very good value. You won't get, but
think about what they're going to pay you in, though. They're going to pay you in something that, at that moment, because if they need to go to that extreme and nationalizing things, that means the currency itself may not be worth a thing.
I mean, in that case, then the capitalism, not that we have much capitalism now, but all bets are off. I guess in the 30s they confiscated gold, but back then gold was a much more important part of the system. But they didn't do anything to the mining companies. So I would say anything's possible. Unfortunately, the US and the UK are becoming more and more like third world countries. So that's the kind of thing that they would do in Bolivia or, other countries like that. So it's not out of the realms of possibility.
Right. And I think if they were to do that, it would not be mainstream because it would bring attention to the importance of gold. Like if it wouldn't say across the headlines, you won't see it in Fox and all the bought and paid for mainstream media, gold mines nationalized. No, but they're like, why would they do that? So people start asking questions like,
Yeah,
wow,
I think
gold.
they might do it in a way that it doesn't look like they nationalize it. They've
Correct.
got ways they'll spin it.
Right. Here's another question here. It says, when will the U.S. government enact price controls? I think they're trying to do that now. they're trying to do that now, I think, in small forms, especially when it comes to energy. And I'm not sure if that bill, that was put out there that we talked about, I think last week, is at where it's at in the I think it got to pass the House. Now I think the Senate is going to stop it, whatever. But so I think, once the baby formula situation, if that continues and other items that become mainstream topics happen, then at that point they're going to come in and say we need to, ship it over, and it's going to go through our government, and it's going to be at a certain price type of thing. I don't think they're going
Yeah.
to put it on companies outright because that's going to.
The bad thing about price controls is that it you have to look at the other side of the coin. People who produce the goods, they usually have a cost of production, and if you put price control on that, you keep the price low. People are going to demand even more of that good. It's going to
Right.
create more demand,
Right.
and then the producers are going to be losing. They're not going to be making a profit, so they're going to stop producing that good.
Yeah.
So there's going to be more shortages, more higher prices. So it's the most stupid thing to do. But I heard someone talking about that on YouTube the other day, and they've been doing that for 4,000 years. Price controls governments, and it never works.
Right.
But unfortunately, it's a short-term thinking by politicians who want to placate the general public.
Right. And here's a thought here. They will get ready to dial back. So Bernie Scan says the future will be attention based. YouTube, Facebook, Twitter, people will be paid in crypto, not silver, to watch. And I do agree with that, definitely, because they don't want you to even have recognition of the importance of silver. So that's true. But then again, that to me, that's a little concerning, the fact that your attention will be monetized already more than it is now, and you're going to be paid in crypto. But then again, it's going to have to go through a single source or of some kind.
Yeah,
and it will be behavior dependent, because you won't be able to have free speech at that point. This is what I'm saying. You're giving up free speech and ability to speak freely for payment for your attention, because you only watch what they want you to see. That's what I'm saying. Or you won't get paid as much if it goes against them. So that's not good, man.
I guess you could say we're already getting paid, by YouTube
through
when
AdSense,
we monetize. And I get paid in crypto when I put my videos on Hive, DTube, and other blockchain-based platforms.
Yeah.
And I know how to deal in crypto and convert back to fiat.
Right.
And there's always a road to real money, to gold and silver. You just have to learn how to convert everything. It's going to cost, unfortunately, but there's always a way out.
Right. 100%. Ren Yin, thank you for that love offering there. All right, let's okay, here's another thought here. Appreciate you. It says, no one is talking about the millions of people who cannot withdraw their Bitcoin for fiat. Look at Reddit. There are literally hundreds of thousands of people who can't get their money. Ren Yin, I wasn't familiar. People have been trapped in a system like that. I mean, is this, certain countries or what? I don't know anything about this.
I think I can talk a little bit about that. What he's saying is that they can't, they can transfer or exchange their Bitcoin for fiat in an exchange.
Yeah.
But a lot of countries are, and their banking system are blocking people from sending the fiat that's coming from cryptos, because they want to discourage people. I mean, here in the UK, I used to use Binance to convert into pounds and then send it to my bank, and they stopped that. So I had to find another exchange. But I don't keep much crypto. As I said, the only time I get Ethereum or Bitcoin is when I have to get out of Steam or Hive, and I put it into those. But but some people argue that Bitcoin, you won't have to exchange it because it's money and currency, right? But
that was the initial selling point.
Yeah, and they used to say that it was going to cut the middleman. There was going to be no costs to transfer. But if you try to transfer $20 in Bitcoin, it's going to cost you $18. So you got nothing left.
Right. Now, I'm sorry, go ahead.
No, that's okay.
No, so to that point of, people's coins being trapped in, let me share with you my thesis as to how that was deliberate as we uncover more of the intentional usage of crypto. It was designed to be a gateway for the elite and the big bankers, whatever, to transfer their wealth in digital form into the next system and have some weight on that end. And so they want you to use their payment method. So I would assume eventually all those countries where those funds are trapped, you're going to have permission to get them out, but you're going to have to go through MasterCard or Visa because they want you to spend it and get cash and crypto back and all that same banking model stuff that we had a year ago. Now, every single crypto project out here have, crypto-backed cards through Visa and MasterCard. So what happened to, you, as Mario mentioned, you spend it directly yourself with getting away from the middleman. But instead, now they want you to go through their gateway. So in order to get your funds out, you're going to have to register your ID, your social security number, your blood sample, and everything else. Get one of those cards. And then with those cards, they'll be able to track, trace everything you do with it, give you limits on how much you can spend, and all the same things from the
And they will make a cut on every transaction.
Exactly.
As well.
Exactly. So
that's
why those
point,
funds
Mike.
are trapped.
Yeah. That's a good point.
It to me, it plays out perfectly.
I think it's
dialectic.
I would say some people might not agree with me, the crypto maximalists, but crypto seems to, and I didn't think of this in the beginning when I looked at it, but it looks like it's a Trojan horse.
Oh man, I got rants for that for days, man. But yeah, so let's get ready to dial back, man, because we can go down rabbit holes and we can piss a lot of people off. But the truth shall set you free. And for those that might be new, I try to put together something that I think can parallels this exactly. If crypto was the solution that the bankers are running to now, I talked about in this most recent on the right side, in El Salvador, the Bukele, he invited 32 central bankers and 12 finance ministers to discuss Bitcoin. And so if Bitcoin is the bankers' preferred asset class now, and we were told 34 years ago that we would be needing world currency, just connect the dots. Like how do we go from burning fiat to now the solution being computer
and how can I just make another point?
Yeah.
Is that they got the general public, the programmers, to build the whole infrastructure for them, and it didn't cost them anything. I mean, that's quite a genial strategy, isn't it? And now it's all there for them.
I'm gonna end with this, Mario, because I don't want to take up much more of your time. But I put a video up yesterday. And I want to fast forward right to the juicy part of one of the key. This is one of the key crypto people for Cardano project. Listen to what he's saying.
Since launch, really.
The Ethereum team is really one of the most remarkable that I've ever had the privilege of working on. It's a wonderful mix of both old and new. There's some senior software developers, people who work for Goldman Sachs off Wall Street. We have very young entrepreneurs on the team, older entrepreneurs.
So I'm gonna just so that video speaks for itself. I ranted about that yesterday. I'm not gonna do it again. But so just when you have a key player who was a part of the Ethereum team talk about Goldman Sachs and all those old legacy people got together with the young people, and who funded it? Who funded it? JP Morgan did.
Or Goldman Sachs.
Yeah. So hey, man. Anyway, but everybody, man, as always, it's good to connect. Hope you guys found some value in the rants, and of course, everything points back to something real and tangible that clings in your hand for preservation's sake, purposely, financially speaking. So, but other than that, you have to take care of other areas of your life: food, water, shelter, clothing, everything that's real and that you can feel that they're trying to, take away from us. But Mario, any last thoughts to leave us with, man, before we dive back?
Well, I mean, I wish all the viewers in the States a nice long weekend. I think, is it Memorial Day weekend? I think here we've got I know the Queen's Platinum Jubilee, I think 70 years. So next week we've got like almost half the week off as well here. It doesn't really matter to me, but it's going to be a bit more relaxed, the markets. Apart from that, just be patient about gold and silver, I would say. It's kind of frustrating right now, the price action. But if you look at commodities, the Bloomberg Commodity Index is at the high of the year. And I think the central bankers are going to keep inflating, even though it looks like they're tightening. The real rates are still negative. So that means you're still getting paid to borrow money. So keep that in mind, and don't let the mainstream convince you otherwise.
Right. Hey, can't be said any better. As always, people, it's been great hanging out, and have a great weekend. Stay safe, stay blessed, and continue to put the Lord first, and everything is going to be all right. But anyway, enjoy the rest of your day. Peace.